Hello, pun people, wagwan. That means what's up? What's going on, people? How you guys doing? Hopefully, you're enjoying your wonderful, beautiful afternoon, right? Happy Friday to everybody. As you can see on your screen, what are we going to be talking about, class? The new American infrastructure, payment infrastructure. That is upon America. A lot of people don't know about this. A lot of people just don't care. So the Fed is restructuring the U.S. payment ecosystem with the Fednow service. What FIs need to know. So the Federal Reserve long-awaited digital payment system Fednow will be deployed in phases with the initial launch planned for July 2023. Fednow is the first government-created system in the U.S. for financial institutions to send and receive funds in near real-time online, with the primary goals of providing immediate access to funds and offering real-time and accurate views of account balances. Fednow promises to enable smoother operations by ensuring instant payment capabilities without any delays of a few business days or during holidays or weekends. In addition to money transfer, the system will allow bill payments and other consumer activities to move more rapidly, decreasing transfer time from several days to just a few seconds and at lower cost. The FedNow service will be a cloud-based solution available online 24/7 and open to depository institution eligible to hold accounts with the Federal Reserve, right? So you have to be eligible. Participating financial institution will complete a training and certification process in early April, according to the Fed announcement. So basically, this thing basically just it's already started. The enrollment just already started. It's just they haven't implemented yet. So of course, this article is coming to us from tiersheet.co, and it is written by Sarah. All right. So what does FedNow? How does FedNow work? So FedNow acts as a clearing service of financial institutions transaction, so they can provide immediate end-to-end payments to their customers. The Fed is working with credit unions and community banks specifically to prepare back-end operations for the new real-time payments rail to support bank readiness for instant payments. So with the launch drawing near, we urge financial institutions, this is a quote here, we urge financial institutions and their industry partners to move full steam ahead with preparations to join the FedNow service, said Ken Montgomery, the program executive and first vice president at the Boston Fed. So one of the ways the Fed is moving towards real-time payment is by leveraging the existing FedLine connection model. This allows electronic access to information services as well as critical payment service for FedNow connectivity. An instant payment system like FedNow will offer authorization, posting, or creating a record of the payment settlement and a notification confirming whether the transaction was successful or failed, all in almost real time. So more than 120 organizations, including Square Financial Services, FIS, Jack Henry, Fiserv, Terminus, and Finastra have joined and other banks, credit unions, and payments technology organizations to become a part of the Fed's pilot program. These participants will support the development, testing, and adoption of the FedNow service, as well as facilitate the development of services and use cases that leverage FedNow functionality. Additionally, primary areas of pilot interest and feedback focus on onboarding, operational controls, documentation, and the ISO 222 message format. ISO 222 is a global standard for exchanging electronic messages between financial institutions. So you know that the Fed now is going to be working directly with SWIFT. What does it mean for the existing payment rails? The initial, we won't know that until all of this is rolled out. And how we will know is based upon the use case, right? So if a lot of people use it or not. If a lot of people are adapting to this digital way of paying for things, then guarantee the cash is will be no longer. I mean, it still would be cash will still be existent, but there won't be no need for printing it when they could just type it. So, the initial operation of the Fednow service will provide baseline functionality for a range of use cases, including account-to-account transfer and bill pay among B2B payments. By using the Fednow service, bills from service providers will have an embedded link to make the payment that will automatically redirect to a payer's online banking portal where they can review the details and hit submit. Small businesses can leverage the network for faster bill payment capabilities in the same way, enabling them to respond to customer needs faster. The key question, however, is how will FedNow unpack other payment providers and whether the new system can coexist with the existing payment rails in the space. While the competition in the payment space has intensified, challenges will be tied to the ability of payment providers to deliver not only FedNow but other rails as well as like Fedwire and Swift. Especially as banks are looking to adapt and deliver multi-rail payment hubs. According to Michelle Bateman, Director of Product Management in Finastra, many of the existing payment providers and fintechs are overlay services built on top of the ACH rail. These services give the perception of instant payments to the end customers, but expose financial institutions and fintechs to credit risk. Quote, in the front end, it looks like the money has moved, but it still needs 2 days to process on the back end. It's to their benefit to adopt real-time payments to lower their risk, said Heeman. So principal consultant of the business solution group in Temenos. So when it comes to existing domestic payment rails, the Fed has an existing payment system in place, Fedwire. The primary difference between this service and FedNow is that FedNow will be online 24/7, and there's probably more transparency where the other one is more private. I bet. That's just my opinion. There's also a real-time payments network, a private service by the Clearinghouse launched in 2017 that is used by many larger financial institutions to transfer funds. Due to the existing widespread adoption of the RTP network, the initial phase of FedNow will operate as an alternative to RTP as the two share similarities in their frameworks. This was a strategic move on the Fed Reserve's part to mitigate the possibility of the new system failure by offering a model close to the system in play. The RTP is operated by a conglomerate of big banks, and FedNow is operated by the Federal Reserve Bank. When it comes to transaction amounts, the initial FedNow system will include a significantly lower transaction limit to support more financial institutions, including smaller community banks, capping transactions at $500,000 as opposed to RTP's $1 million. Additionally, FedNow participating banks can utilize their master account with the Federal Reserve, preventing separate fund requirements. Participating banks and credit unions that already use RTP network can opt to use the FedNow systems as well, introducing healthy competition into the space. Quote, I think two real-time payment systems can exist. From the perspective of financial institution, participating in both payment systems enables their customers to send and receive transactions with bank participating in each of those payment systems at Bateman. So guys, as you can see, the American government is in full force. They've been working on the CBDC since 2020. China started this a long time ago, but China implemented this in 2021. America's implemented their not CBDC, but digital technology payments solution in 2023, July. It's already began. The pilot phase already began. All of these banks are starting to adapt, right, in preference for July. So, guys, once you start seeing a difference in the way you start paying for money, and you start realizing, hey, cash, I haven't touched cash in a year. I haven't touched cash in 2-3 years. Think of me.